Hello, everyone. We are back with you. How are you doing today? This is an exciting day. Today, yesterday we had a lot of volatility in the market, so this week is has a lot in store for us. If yesterday was any gauge, how are you doing today? We are, as you have seen, we are a bit late because we had some technical difficulties, but rest assured, we have a lot in store for you for today. So stay tuned. We have, as we mentioned yesterday, we have a special guest for you, who is the CEO of The 5ers, Saul himself. Without further ado, I will introduce him and let's bring him on. So, how are you doing today?
Hey Victor, we're in the wrong link apparently. I'm fine. Excited to be here. Long time. Last time I was here was like 2 months ago, so very excited to be here. Closer to the traders, to the audience, to rub shoulders with the guys to trade some and hopefully make some money off the charts.
Yes, indeed. We were to let you just guys know this things happens when you trade when you stream live, right? I entered, I created a we entered, I started the show already on time, but in the wrong room. So you guys were waiting, and we already started, and it only took me not only it took me about a while before I realized that we're not in the right room, but we are right now, and we're happy to be here today. We're going to be trading live with Soul. Soul is a great trader, and we're going to be asking you have the chance in the chat to ask all those questions you would like to ask an expert, right? We can deep dive deep into how Saul trades, how he thinks, why he trades, and all those good stuff. So let's see. So before we start, and of course I asked this question before, but the audience weren't there. Um, for those who are new to our company and to our YouTube channel, who
Yep.
haven't seen you before, who don't know who Soul is, right? And since we have been growing a lot as a company, I'm sure those are a big number of people who may not have seen you yet. Um, who are you? What can you tell us about the who is Soul as a trader, but as well outside a little bit as much as you can outside of trading?
Yeah, absolutely. Besides running the company, I've been trading for 14 years now. I started back in 2010, and it was a long process realizing how the market works and what moves the market and what's the behind the scenes of the market, and then understanding what's better for me, for my personality, the style of trading I need to use, and tuning the things and the concepts I learned everywhere into what better works for me. So yeah, a long journey in trading. The company, father of two, love sports, love different things. So that's me in a nutshell.
Nice. So, um, let's start with the first thing. You are How long have you been trading? Let's start with that.
Yes, so I started back in 2010, and it took me about 2 years to become what I thought back then to become consistent. Of course, then you learn more, and then you learn more, and you understand that there's much more to learn and to understand. But yeah, so we can call it like profitable since 2012. I started in 2010 and up to date.
Nice. And how would you categorize yourself as a trader? Are you a swing trader? Are you what kind of trader are you?
Yeah, I consider myself a scalper. I did start with all these sentences and all these phrases. The trend is your friend, and let your wins run, and all of that. And at some point, I realized I was struggling doing that. Holding my trades for a long period of time. So slowly, I needed to switch and to tune what I did according to what, who I am and my personality, and slowly, turn into these scalping techniques and trying to be the least amount of time in the markets, because as long as I have like open positions, I struggle to not think or not intervene in those trades. So I would consider myself a scalper.
A scalper. And for everyone who is completely new to trading in general, I mean, let's start with 101. What is a scalper? How do you define a scalper?
So of course, if you go out there and look for the scalping definition, you'll find in Google that scalping is just being in the market a few minutes or a few seconds, or scalping off the 1 minute chart or something like that. My understanding of scalping is different, and it's not based on time, but based on market structure and market movement. So the market moves from key levels to key levels, and as my definition of scalping is attempting to trade between the very next key level available. So if you're getting at a certain point, you're not trying to run or keep a win or a losing trade across multiple key levels. So you're trying to get the target or the profit just from the distance between those key levels, the very next key level available. So understanding that, then you realize you can be performing scalping of any time frame. Okay, the dailies, the hourlies, the 1 minute, as long as you're going from one key level to the very next available key level.
I understand. So what you just said is you don't define being a scalper by the time you are in the trade, right?
Correct.
Not even with the time frame you're trading, not necessarily.
Correct.
But you're defining it as just going from one level to the very next level.
Correct.
Right? Okay. All right. So that's a very helpful way of looking at it, because when we say scalping, and one people say as a guest or as on the show or anywhere, we say scalper, it may mean different things to different people, and it's always good to from the start know what we're talking about and what is a scalper to you, and so we understand where you're coming from and what you mean by being taking a trade and what kind of trade you're taking. Very good. So all right, let's look at the charts. Maybe I can show your. Would you like? Maybe we can start with a normal day when Saul when you come to the charts. What is your what do you do? People want to see that those 14 years of experience. What have that synthesized into in terms of workflow, in terms of steps you take as you approach the market. So I'm going to show your if that is okay with you, your screen, and you, if you don't mind, take us by the hand step by step. What do you do as you open your terminal?
Absolutely. So yeah, so this is my screen. This is the account I've shown on the trading rooms. Not very active in it, but anyways, I always start with the dailies, and I try to understand what is the bias for the day, and I'm trying to understand what direction is the big money, moving the market that current day or week or period of time, and try to identify in which currency pair or asset I have the best opportunity. I have the clearest pattern for that day. Of course, we have, especially across the yen pairs, very nice movements and very nice volatility starting last week when we had this interest rate hike, and all the consequences of that, positive and negative consequences of that. People going off the stock market into cash potentially. Trying to understand if this is going to be a trend of increasing rates in Japan. So we see the Japanese yen strengthening across the board, and of course people also who had loans in Japanese yen is suddenly going to be more expensive So they withdrawing those loans and going into different. So it's a very, macroeconomic is a very interesting period of time right now. So we see on yen pairs, dollar yen, for example, a very sharp movement to the downside.
Okay.
So we can see that, from since last week, and especially since this period in time, which was last week when the interest rate caught everyone by surprise. We had this sharp movement to the downside. So that gives me the bias for this session, for example. Okay, that gives me a bearish bias. Of course, we are getting into some demand area, and we already had the first reaction, that demand area, but still the bias is to the downside. So my bias, I get it from the dailies, and then I go down to lower time frames. Let's say the 1 hour chart, and I try to get my levels. So I have the level I mark from the dailies, and I see another strong level up here, and I see another level here, strong level where an important movement was initiated. So you can see it here, but that's already been tested, 1 time and 2 times. I traded that yesterday. It was a really nice trade day yesterday. So that has been invalidated. Okay, so the level is there, but it's already been consumed. So now I'm kind of in a waiting game. So my bias is down, but I don't have a clear level on the hourlies up until there. So ideally, I wait for the market to go all the way there to try to go into short positions, and then I keep going down into the time frames just to get more details. So I go to the 5-minute chart and I try to see if there's any tiny scalp opportunity or something like that. So on the 5-minute chart, we do see this strong impulse to the downside. So we could say this is going to be kind of a resistance level. So if the market goes there, I might try to go short, as my bias is in the same direction. So if we get to that level, or probably this level up here, and depending on how the market is behaving, I might try to go short. Now I have a trade open, and already had a couple of trades open, not on the yen because I was waiting on the yen, but on the euro. We have a similar. Let me hide this, and we'll get back to this. But on euro, we have like kind of the opposite movement, and what could be a nice opportunity. So on the euro, we see from the NFP on Friday a very strong movement to the upside. So I think there's still some momentum to the upside. Bit neutral, but a slight bullish bias. And then if I go to the hourlies, I can see the NFP levels down here, which is of course a strong demand area. But I can also see this second reaction from the NFP. So that demand area is what marked there, and the market is right now testing that area, around that demand area. So I'm trying to see if there's going to be a second reaction to the upside from this first time the market's being there in that area. So zooming in a little bit more, okay, we can see the demand area, and we can see the market approached the demand area kind of strong and then slow down. So once the market slows down and in a weak way approaches a strong buying area, I want to be buying. Okay, I want to be active in the market. So I'm trying to read price action to see if there's going to be a reaction of this demand area, or if it's going to to fail, and then I'll have to take the loss. So then I go. I'm speeding up things, or we're good?
Well, no, that's fine. I think you're going to great detail.
Okay.
But before I think it will be great if we do a couple of steps back, because you mentioned
Okay.
some great things, and I think the new trader, the unexperienced trader, may not appreciate the importance of every step, and why do you do that, and what it means for your trade plan. First of all, you started saying you go to the day, so you start with
Yeah.
a top down analysis. So you
Yes.
don't start with the chart on the minutes, on the 5 minutes, anything. You go with the macro structures. That's the first thing.
Correct. Yeah.
Second thing is, you mentioned last week you have the narrative. It's more than just a narrative, of course, but you told the events in the market,
Mhm.
fundamental events that happened
Mhm.
last week. The central bank of Japan increasing rate, and that having some consequences for everyone who is, who lended money, has loans in yen,
Mhm.
because their rates are going up and they have to, repay or pay more interest, etc. So
Correct.
basically what you're saying, you start with a fundamental idea. Is this something you always use, or is this only just because this is a special occasion?
Yeah, this is most of the times what was important in this occasion is that it was unexpected.
Okay.
So usually, you have a forecast of what's going to be the interest rate number, and usually is accurate. So the market is already has that priced in. But at this time, the forecast was to the interest rate in Japan to remain the same, 0.1, and that failed to be true. So they increased it by 15 points or something like that. So it's now
Yes.
0.25. So the surprise is what caused all these strong movements. So you can see the reaction of the surprise in the markets, in the chart, in the technical movement. So when there's something like that to be considered, I do take it into account, but I don't get married with that, because many times the reaction of the market to certain fundamental events is very, very unexpected. But I have the confirmation of that in the chart. So I'm seeing the charts. Okay, I'm trading what I see, and of
All right.
course in this scenario makes sense to the fundamentals.
All right. So basically, what you're saying is you're looking at the daily, you
Yep,
trade the daily, and you get your trading ideas on the daily. But
my
if you
bias. Yep.
understand the drivers, the fundamental drivers, then you incorporate that with your, going forward.
Yeah,
And if
that gives me like an extra confirmation of the bias.
I see. All right, I think that's so you're not based on the fundamentals, but you start with the technicals and you look to see if the technicals make you understand what fundamentally know about what's happening in the world, and if
Yep.
those two things align, then you add that fundamental bias to your trade plan. I understand that very very clearly now. Another thing, then you start with the daily, and um, you mention, or actually you have on your screen on the daily, you have
Mhm.
levels.
Yep.
I noticed that personally your chart is quite zoomed out in comparison to how I would look at it in terms of, I like on your chart, the candles are very small.
Okay.
Do you look at, you know candlestick patterns, or are you looking for the overview?
Yeah, only for the overview. I don't really believe in candlestick patterns. I think they're
Okay.
arbitrary, completely arbitrary. So I don't follow those. But I just want to understand where key movements or aggressive movements were initiated. Okay, so for example, here on the dailies, I see at this point this movement, this impulse to the upside, which afterward has confirmation, it started here at this point. So that hasn't been tested until yesterday. I see up in the top. We have this level where this strong movement to the downside and continuation happen, and we have this level, which is the mid range impulse or mid range supply. Also, this strong movement to the downside happen. So those are kind of the levels I'm looking at.
All right. So you're not looking at candlestick necessarily. You're looking at the impulses that are created in the market, and
Correct.
then after the fact, you go back and look at the source, or the ignition, the area that impulse started. Right.
Correct.
Okay. And how do you draw? Do you have a special way of drawing those, levels? Is it do you have like a specific way of doing it, or is it more depending on each situation?
So usually, okay, these levels I call them supply and demand areas. So
Yes.
usually, supply and demand areas have like important two or three important points. So if I zoom in a little bit, okay, to this one, to the top one, you have the extreme point, okay, with the very top tick, which would be maybe this one or this one there. We have, and you have the confirmation, the breaking or the breakout point, okay? So this strong level, this strong candle to the downside broke, and we can kind of confirm the turn, broke that level. So you have the top level there, and you have the bottom level of the previous range before the strong impulse happened down there. And so that creates like the box you wanna mark. That's the supply area, and then you just
extend it
to the right, to just to be aware the next time price goes back to that supply area.
Very, very nice, very clear. So you basically I understand. So you take the extremes of the consolidation area from where it broke out.
Correct.
Basically, I see. Very nice. And then you go from you went from the daily to the hourly. Is that the always? Do you always do that? Or do you always go from the daily to the hourly?
Yeah, I do, but you could use the 30 minutes or the 2 hour or whatever you want. It's just to get more clarity on the level. So, for example, I have, from the dailies, I have this mid-range level, or from the dailies, I have this extreme level. But on the hourlies, I can get it more precise. So let's go to the extreme level. Okay, now on the extreme level, you can see we have the top level, we have the confirmation level, let's say the breakout, but we can see on the hourlies, and this is something we didn't see on the dailies, we can see this level right here. Okay, so that's where the movement was initiated. Okay, the big candlestick was initiated at this level. So you kind of make zoom in, you just zoom in into the level to get more clarity. So within the daily supply area, I have my more defined hourly area. So I go to the hourlies just to get more precision on the level where it's more likely to get a reaction. So that's why I go to an hourly level. For example, this level right here is not something I saw on the dailies. Okay, you can see on the dailies, I could hardly see that level, but when you zoom into the hourlies, then you see, okay, that's a nice level on the hourlies that I missed on the dailies. I can try to make a trade around this level as well.
I see. And when you have let's say you have a prolonged consolidation, and because you define the level, the area, the level by the impulsive move at which it makes after leaving that consolidation area, how far in back do you go to include in your, let me do that in the screen, how far do you do that in the consolidation? How far back do you go? Let's say you have a very long time, there's a consolidation, like I don't know, many bars, a lot of bars, and then it breaks out. Do you have a limit? Like, do you go only so far back, or do you go the whole consolidation area? Is my question clear, or should I maybe show it in a screen? Maybe I couldn't.
Yeah, maybe you can share it, because I'm not
No problem.
100%
Yeah.
clear.
Let me get that clear. It's always better when we have some visuals here. So let's say I'm trying to understand in a detailed way, right? If you have a consolidation and you have a
breakout.
move, a breakout, and now you say, okay, so this is the level. Let me make it maybe a little bit. Well, doesn't matter. Something like that. Do you have a limit as to how far back do you go to define that level? Let's say you have although it has been going back, the consolidation is has been gone very long time, and it has something like this, and then comes back. How do you define in this case? Do you take the only this area as your level, how far back do you go with your level? Because if you go further back, of course, your level becomes
Correct.
differently drawn. So how far back do we have a rule about that, or is it just visually?
Yeah, it's visually, and I don't know. I don't go way back because past information has already been consumed. The I don't know if I cannot draw in your in your chart, but the all the old consolidation levels
Yes.
with all those movements up and down,
Okay.
the supply and demand area, the order flow there has been already been consumed. You know what I mean? So I'm already
Okay.
not that one, but the little ones. So I'm
Okay.
already
Okay.
concerned. I'm only concerned about the recent ones that were not consumed. So in this, it's a drawing, but in this drawing, I would only care about that one because
This one.
because that one wasn't tested. So in this case, instead of having a reaction similar to previous one when we just kept consolidating, this time we had a breakout. Okay, so the moment we broke that level, we had the confirmation of the breakout. Now next time the market will go back to test that level, I'll be looking to buy.
All right, I understand. So basically, you're looking for the most recent data points to form your level. You're not looking, all the way back, because when you're applying these kind of concepts, it's good to know, how far back should I be looking, because otherwise
Yep.
I'll have different levels and I'll have different signals, and so that's a great place. This, of course, looks like an order block to me, but yes, let's get back to the
Yeah, I
your
think we see similar things, just we name them differently.
differently. Yeah, that's a common theme. That's something we see with different traders coming on. It's a recurrent theme. It's something, everyone, we're looking at the same, and they're trying to catch the same. Usually, we only look at through different lenses. All right,
Yep.
so let's go back to your screen, Saul. So now you went from did a top down. You have your bias, your daily bias. You go to the hourly to fine tune your get a better granular look at the
The
market. What do you
levels. Yep.
what do you do next? So you mentioned something about when the price comes into that level
hmm
that you previously uh,
Draw.
uh, draw,
hmm
and you will start to look at. You mentioned something, how fast it's coming into the level and how it is slowing down. So basically, you're saying, I'm hearing deceleration. Is that correct? Are you looking at the speed and the change of speed, how the market is reacting and behaving as it is hitting that key level of yours?
Correct. So we got the bias from the dailies, we got the levels from the hourlies. Now I need a setup. Now I need a reason to get into the target. Now I need the strategy. I need the signal to tell me, okay, go long or short. So I look for that signal or that setup on the 5-minute chart. So one of the setups is what you're mentioning right now is the market approaching those key levels on a weak way. Okay, deceleration, how you phrase it. The market getting slower and getting weaker when approaching a strong buying or selling area. So that's one of the setups I'm looking for, and one of my favorites one. But it's only one. Okay, on the 1 minute, on the 5-minute chart, you could be looking for breakouts or retests, or I don't know, you name it. There's plenty of setups, but I look for a setup on the 5-minute chart, close around those levels, and ideally align it to the bias from the dailies.
I see. So you wait for the which level are you waiting for price to come to the hourly or to the hourly within the daily time frame, or it doesn't, you don't look at that way? How do you, which one of the two levels you mean?
Both. Usually, we were looking at this one. Okay, so I have we have all the the top one we saw. Okay, we have a daily level, and we have an hourly level. I don't know where the market is going to turn. I don't know where the market is going to do what it's going to do. So I just look for the setup. I look for that confirmation. And this setup for this level, for example, we got it only from the hourlies. So if around this level, which is only from the hourlies, I didn't see it on the dailies, I see a good setup, a good opportunity, then I will also take the trade. But so I'm in, I will trade both levels, the hourlies, dailies, so everything.
All right. So the hourlies, the levels you see on the hourlies, they do not need to be, necessarily within the levels of the daily. Okay.
No.
And another thing you said, bias. You take your bias from the higher time from the daily. Does that mean that if the daily bias is short, as it is in the dollar yen, does that mean that you only take shorts? You're only looking for shorts?
No, but ideally I want to be taking shorts. So only if I'm going against, if I'm going to be taking longs, I will be applying a different risk management. I will go less aggressive. I will go with more confirmation. And if I'm going with the aligned to the bias, then I'll go more aggressive with less confirmation and more confident.
I see. So it's not a hard rule, but you want to be with the bias, preferably. But at times, if you find a setup, against the bias, you are able to take it. Just you need to adapt your risk and perhaps your expectation as to how far it goes, right?
Absolutely. Mm-hmm. Absolutely.
Yeah, understand. And another good question from our audience. We didn't mention this. Very good question from the audience, asking, what is your primary pair for scalping, and why that choice? Do you have a primary pair? Let's start with that.
Most of the time I'm trading the Euro USD. It's the one I grew up on. Okay, I learned and I was raised around it, so I kind of understand it. I know the nuances. I know how much volatility to expect. I know I kind of know it. But many times it's a very slow pair, or there's no volatility in there. So I'll look for other pairs. Yesterday I was trading dollar yen because the volatility was there. But my bread and butter is Euro USD, but I'm not married to it. So I'll trade whatever is moving and whatever is volatile.
So basically, your favorite is Euro dollar.
Yeah.
But you're not limited to only that. When you have opportunities, you're able to and do you only take trade Forex, or do you venture into other asset classes as well?
Yeah, I trade I can trade gold or indexes or whatever.
Yeah, the principles of technical analysis, they apply to all financial assets. So there's basically, we try to think them into certain groups, but that not necessarily doesn't mean it's the only thing we can do with the TA.
Correct.
So great insights. I think the viewers will be are enjoying this a lot, because it's difficult, I think, in nowadays with the advent of YouTube, to get good traders sharing good examples, right? It's very easy to be putting out any kind of content, but to get a veteran, an expert in trading, and showing you the basic stuff. And on when we see out there, we see all people using all kind of sexy things, complicated, intricate ways of approaching. But to me, and I think maybe that's the question I have for you, do we need to complicate? Do we need indicators? Do we need a lot of things to be profitable or not, in your opinion?
I don't think there's right or wrong here. I think each trader is a world. Each trader is different, and you need to understand. You need to use whatever helps you, to become profitable. You just need to understand what are you using and why are you using it. Back in the day, I was using some indicators. Later on, I understand, with some practice and your own eyes, you can kind of, get the same information from a naked chart that the indicator gets for you. So I kind of clean my charts of indicators. But if that's helping you, if serving you, if it's making you a better trader, use them.
Nice. Another good question we have from the audience. The audience really like this session. They have good questions, good engagements. And for the viewers, if you appreciate, you think this is good value for your growth, hit the like button. Let us know. Give us the feedback. What you think of our sessions, this session in particular. Hit that like button if you think this is valuable to you. Coming back to the question, what is the minimum time frame you use in your trading? How low do you go, Saul?
So sadly, the MetaTrader goes only to the 1 minute chart. So that's why I trade off the 1 minute chart. But back in the day, I used to use a different platform that allowed me to trade off the tick charts. So I would trade off the tick charts, and many times, while trading on the 1 minute chart, I'm actually looking at the tick charts and trading or making trading decision based on the tick charts. So if I could trade off here, there's no way to place trades here, which is the problem, or I don't have like a quick way to trade based on this window. But if I could, I would be trading based on the tick charts.
So basically what you're saying is the smaller, the better for you.
Yeah, for me, just because if you can find patterns the same way you find them on larger time frames, you can find them on the lower time frames, on the tick chart, for example, which is the smallest or shorter time frame available. You'll be anticipating yourself to the patterns that are going to happen on that larger time frame. So a pattern before it happens on the 1 minute chart, it will happen on the tick chart. So if I can find it here and take it and trade it off here, I'll be out of the market even when before the pattern triggered on the 1 minute chart.
Wow, that is some insightful information there. I think this goes to show the difference when you have people who have a lot of experience. They think completely different than most others, right? They are not limited to the terminals offerings of the time frames. Very nice. I like that. A few more questions. So if you don't mind, what is your typical, right? I know it fluctuates in time, but what is typically what it considered to you typical win rate for you? Is it higher than 50, lower than 50? Is it what can you tell us about that?
Because of the nature of how I do trade, I tend to take large losses and multiple small wins. So in order for me to keep profitable, I need to keep very high win rate, above 70%, because my risk reward ratio tends to be break even or even negative. So my win rate, if it's above 70%, I know I'm profitable. If I manage to have it above 80%, I know I'm killing it. Above that, of course, I'm doing great. But if my win rate falls below the 60%, I'm losing money.
I see. So you need to keep it above 60, right? You said
60, I'm breaking even. 70% and up, I'm profitable.
I see. Nice. And your risk reward, you said, is around 1-to-1. I think you mentioned, right?
And sometimes negative. Yeah.
Okay, I see. All right. There are a lot of questions, so I will go through them as time progresses. All right, so let's look a little deeper into your trade you're doing. I will let me take a closer look. So you have a long position on euro dollar. Could you break down as you did?
I'll tell you.
Yep, go ahead.
I'll tell you what I'm looking for. So I told you I was looking at the bullish bias, and I have this level from the hourlies. Okay, and I'm looking for my setup now. Okay, I'm at the level. Okay, I'm at the demand level, Now I'm looking for the setup. Now the setup is seeing the market approach the level. Here we have the level on the 5-minute chart. Now the setup is the market slow down once it reached the level. Okay, so last time the market was at that level, there was a very strong reaction to the upside. Okay, buyers were there, and now that it's approaching and going back to this level, it's coming in a very weak way. Okay, it's not coming in an impulse, but it's coming what's called a compression, okay, or a channel or a weak movement. So I'm just trying to see if there's going to be a new reaction or a similar reaction to last time, like this one, this strong impulse this time. So I just, as market came to this area, I just had a trade. I took already a couple of trades. Let me show them, because I took them just before we started the session. So I took 2 trades and closed them there. It's just only 2. Let me see from today. Yeah, those 2, and I have this floating one. So I had 1-2 trades that already took profits. Okay, at the very next level. Okay, I didn't want the market to go above this resistance level. I took profits before the resistance level, so I'm up for that. And I have 1 more, just waiting to see if there's going to be a big reaction. Now we've been talking, so I haven't been managing or doing anything around it. So I think I will approach this trade more like a position trade. So I just, as long as we are within the demand area, I'm comfortable leaving it on and waiting for the next reaction to the upside. And if the market starts breaking down and it breaks down the demand area, then I will need to take the loss.
So basically, you're looking at how the market. You mentioned compression. You mentioned channel consolidation as it is going into that area of interest. So you're looking to see hints of how the market behaves.
The strength
at the strength. You mentioned strength, indeed, weakness and strength.
Correct.
At the relevant area to you, and based on that, you decide this has a good chance of reacting as it has before. And so what is the signal, if you don't mind sharing, or at least what are you looking for? How do you know it is time to pull the trigger?
In this case, I just pull it. I mean, going into the 1-minute chart, taking you back, back in real time. Let me do that with you. Okay, so at this point of time, I was just looking for the breakout of these levels just to the next level. So I took 2 trades. Then we did have that breakout. Okay, so we created kind of a tiny. Let me zoom in a little bit more. Let's see if we can show that more in detail. Okay, so real time, we had this break to the upside. So this level right here became kind of a demand area, a very tiny support area, or whatever it's going to be. So once the market was approaching that level again, I just took 1 trade, and then we started the session. So I haven't been managing or anything, but I'm just right now. I'm just waiting for the market to react and go to the upside. So I didn't have like a very clear entry point or something like that. Just on the 1-minute chart, a support area that was available.
I see. So you're trying to basically live tape reading and reading that market is getting ready for that push, and you want to participate. We can also see that you took profit at roughly 5. I didn't get the numbers exactly, but around 5, maybe 6 pips. Is this typical for EU? Is this the number of pips you're looking for, or is it based on just the next level? If the next level is 20 pips, would you be going for that 20 pips?
Yeah, correct. Usually on the 1-minute chart, you will not have 20 pips between key level and key level. But if we go back to this concept of available key levels, I entered here. The very next level is this resistance level. Okay, so that's my target area. So between this area where the resistance that I was trying to catch the breakout and the next resistance, it was like 4 points. Okay, 4 pips. So that's the target for this trade. Okay, I'm not looking for more than that. Usually on a 1 minute chart, Euro USD, you have around 3 or 4 pips between key level and key level, sometimes more.
And I see. And that's information that you get only with screen time, right? That's the information you get with the hours and the years of, trading the same pair, knowing that pair inside out, that these kind of facts and data, and they will, of course, they are an expression of the volatility of that pair. So
Correct.
if you change pair, how do you know what is adequate to aim for? Or you don't look at the number of pairs, you just go for the next level.
Yeah, so you can have like an idea. If we go to dollar yen, and we measure, the how long are these impulses been? Okay, so we have, for example, this resistance and this support, and we have I don't know, this support area, and the next resistance is up here. So you can kind of start measuring and understanding, okay, and on dollar yen at this time, there's 30 pips, okay, between pivot point and pivot point, or key level and key level. So we have 40 here, 30 here. So that's, you get an idea of the volatility of the pair in that certain time frame.
All right. I think that's very very great. I mean, as a trader, it's always there's a lot to learn when you see others trade, others who have perfected their craft by doing certain things and not doing other things, discarding, because that's what we do as traders, right? We at the beginning, we don't know many things, so we try different things, and we keep those things that work, and we discard everything else. And it's nice to see someone who is long in the business trading profitably, because you get a glimpse of those things that work for this person. Of course, everyone is different, and those things may not work as well for you. But if we can get, and that is by having you on, we can get an idea of what has worked for you. It may give us some hints that maybe we need to try these things and see if we can get become improvement by using them. Very, very very useful, very valuable, very important, I think, for the growth of our traders watching us today. All right, so we are at the turn of the hour. So and I think I have a better understanding of your strategy, and I'm sure the viewers at home do so too. We are very delighted for your taking the time from your busy schedule as the CEO of the 5ers. I know you guys are, have just done that huge migration, and there are so many developments coming for the traders. So I'm sure you are very busy with all of those great projects. Thank you for your time with us. I would like to, I'm eager to keep on digging deeper into your strategy anytime soon. I would be glad or very happy to have you on again. I'm sure we will do another session digging even deeper into your trading.
Absolutely. I think we just only kind of grasp the idea of the approach, but then there's the whole execution of what I do, which is all the risk management and scaling in and scaling out and all of that, which is a completely different conversation. So I'll be happy if we do that in another occasion.
All right. Thank you very much, Saul. So I'm excited already for our next session. So I'm sure the viewers as well. So we will go on a break. Viewers, we will come back. Rich will be with us, and we'll be doing market analysis for you live, and live trading as well if these setups present themselves. Thank you again, Saul.
And thank you, Victor. Thank you, guys.
Thank you, and hope to see you soon again.
Absolutely.
All right.
Have a nice
See you guys in 10 minutes. And we are back. We're back from our pause, our break. I hope you guys enjoyed Soul trading with us and breaking down his approach to the market. I mean, it is those are gold nuggets. Those are the important, you know, the way someone like Soul comes to the market and looks at the market, the thought process behind it. I mean, there's so much to learn from it. But in the next hour, we will have another great trader with us. We have in the waiting room, we have Rich, who was with us yesterday and will be with us today. How are you doing, Rich? How are
Hey,
you doing today?
I don't know if I deserve the title of brave. And certainly following in Soul's footsteps on the live stream, you set the bar pretty high this this afternoon. You'll have to forgive me. I'm in the middle of two trades at the moment, or one has just closed. I've got another one running, so there's a couple of moving components I'm trying to navigate. Nothing like perfect timing and live trading and live streaming. So yeah, we'll get into
Yeah,
this in a bit, I'm sure.
yeah, live trading. Talk about live trading. I had a little technical difficulty at the beginning of this stream, and those things happen when you stream live. There's no retake. There's no replay. It's you have one chance at it, and if in reality things go a little bit different at times. So if that happens, that is something you part of it. That's part of a live. I like it. There's that excitement of live stream. So yeah, you got to flow with the current.
Mhm.
So we will be looking at, we'll do market analysis in the coming hour. We'll do market analysis, and I will be very eager to look at your trade. If you don't mind sharing it with us in a short while. Is it a EU or GU trade, Rich?
It's an EU. You can guess the
It's an
trade.
EU.
Victor already knows this. He's eyed it up. He's like, I know where you're buying, Rich.
All right. Well, I will do the analysis. Would you, or maybe you can start doing the analysis since you have a trade on, and let us know what is it that made you pull that trigger. I'll put your screen on if that is okay with you. Let's see. That's this one. Yes.
Looks good. There we go. Let me just adjust that. Should be all good.
Yes.
I'll run you through this one. This is what we're sitting in at the moment. So I've been sitting through this for ages and ages and ages and ages. I was looking at this 1 hour. It's actually my first fully tested system was I was watching inverse head and shoulders patterns. And this was the first, I guess this was my first kind of real insights into how markets may move. So love to draw them up as these big zones. We can see this zone from here in the past. And I love the amount of buying pressure that come out of this. We know this as inverse head and shoulders patterns. I'm never going to find the right tool. We can look down here and say, we've got this move here. And we can anticipate that maybe we get some kind of rejection around about this price point. So really good way of drawing up zones is something I was talking about yesterday, just looking at where the market made decision points and turned, and it shifted in the control of buyers and sellers. This drove aggressively out of this price point. So I looked at this zone and I figured this is going to be a really high probability area that the market will at least stall around in this area and give me an opportunity for profit. The problem is I'm targeting all the way up here because I pulled the trigger a little early and ended up getting in this. So ended up sitting through this trade for around about 3 hours, 4 hours. Really good opportunity to practice psychology and just asking myself them questions that we were talking about yesterday. Is it a valid trade? If it went to stop loss, is it a good trade? And what does my trading plan say? My trading plan says hold. So I'm just going to sit in this and hold. But just before we got on the stream, I had this sneaky little play, and I know I don't talk about it often. I had a sneaky little play on the DAX, and I was watching this on the 5-minute this morning, and I looked at this price here, and I thought, I love scalping the DAX. I've got a very, very high win rate, much the same as Soul. Because when I lose, I typically lose big. It's negative risk to reward. But when I win, I have a high win rate. I have to have a high win rate. So my win rate on the DAX this year was 92.6%. I took a
Wow.
last drop to something like about 91.5%. And all I'm trying to do is just scalp small moves out of the DAX. So it's very different to the FX market. So I come to the market today and I was just looking around about 8 o'clock and I saw this move here just drop 150 points, 160 points, and back again in 5 minutes. And I looked at this and I said, no, thank you. I'm not getting involved in this. So I decided to wait. The market got back down to this price point, and I thought, if I'm going to be a buyer, this is my opportunity. And I sat there and I watched the market coming back to this, and I was just looking for signs of buyers, and I just wasn't convinced after what happened yesterday. Just wasn't convinced. So I watched the market move away, and I marked up the low again, and I just kept watching. And I was just watching price action, and all of a sudden we get this beautiful 5-minute candle just rush out the gates. And I thought, this is it. This is what I'm going for. So I managed to catch a quick scalp on the high of this candle and managed to get exactly 20 points just on this run here before the markets dive back lower. So I managed to get out of this one for a nice little gain. A little bit frustrating because I had to pull an account off the copy trader so that I could manage my risk a little bit better. I've got an account that's on the doorstep of passing phase 2, depending on what this, there we are, depending on what this does here. And I didn't need to take on the extra risk. So it was a shame that I managed to take profit inside of 5 minutes, but I wasn't on that account. So yeah, only a few of my accounts got to enjoy that trade. But
Nice.
just a little bit of feedback here. So, Rich, I think something's wrong with your sound, your voice crackling even more in the morning show. Leave it with me. I'm going to see if I can adjust something on this. I might have to stop sharing screen, but we know that I'm in Euro USD long at the moment. Might be easier if you pull up your screen, Victor, and I'll stop sharing. Hopefully that'll sort the audio.
Yeah, I do hear some your sound indeed sometimes cracks. To me, at least not to no, I don't know about the viewers, but in the audience, but to me, it is noticeable. But I was still able to to hear the rest of the phrase, and it's tolerable. But we'll have to see if it gets worse. We will try to make that better, and maybe because you're sharing as well at the same time, who knows. But we will try to sort it out in the coming in this session, basically. All right, so great. So you are in a long position, and you are you said at the doorstep of passing a phase 2. Is that a boot camp account?
No, this is a high stakes account with the 5
High stakes,
centers.
okay.
Yeah, it's just a small one. I've got a bigger live one, and this is another one, which will be really good
Nice.
because then I can use that as my master account, and then I'm looking at smaller numbers.
Exactly. That's a mind hack for you guys in the audience already. What Rich is talking about is the effect that floating P&L it has on your emotions. What we mean by that is that when you look at the market and when you look at your terminal and you see that when you open that trade and you see that number, that P&L, that win or loss, you are still floating, you are currently floating. When it goes up, you feel great. And when it goes down, you feel, well, not so great and sometimes horrible, right? That's not beneficial for your execution, right? Because you shouldn't be feeling really anything. You'll not be perfect and not feel anything, but ideally you should not be affected by what the P&L is showing you. So and this is the mind hack, and I do this too. My master account, right? And this is a little tip, and it helped me a lot, and it may help you too, as everyone else, I mean. If what I do, my master account per trade, I only have $100 of risk per trade, and that's the master account. And this is the account I see all the time in front of me. So this is the one. It goes up and down, and it doesn't go lower than $100 on per signal per trade. I may have multiple signals or multiple trades on, but that gives me a feeling, and I got accustomed to it. So if it goes to 100, okay, I lost 100, and I'm not looking at all the slaves, all the other live accounts that I have that are not risking 100 per trade, right? They're risking much more, but I don't feel that because I don't see it right now. It's a little mind hack that in the meantime that you're looking at that 100, we tend to forget for a little while that I'm not risking 100 per trade, a lot more than that. But at first face, that's at face value, that is what I see, and my emotions are, I trick my mind into thinking, okay, it's only 100, and I don't feel much, if anything, when it goes to stop loss, because that's what I see. And when it also not only in losses, but also when I am a big number, when I catch a big wave and my trade is posting 15R plus per trade, I'm only looking at 1500 per trade on my screen. I'm not seeing all the other numbers that may, when you bring that into your daily life, they may impress you as a person, and you, and that's also not good, right? You don't want to, don't want to get sensitized by the number you see on the P&L. And because when you did your back testing, you didn't look at your P&L. When you did your back testing, you just executed the plan nicely. And that is what I want. That is what we all should want in the execution. And as we trade, we want to be trading that which we back tested, so that we can get the results that we got from our back testing, because that's why we're trading this plan, because we back tested it and we have some favorable results we want to replicate live in the market. And the only way to do that is to replicate everything as you did, including not reacting to P&L fluctuations, right? So if you introduce that reaction to the P&L fluctuations, you introduce another variable and you will not get the same results. So I think that's a great point there. Great mind hack. So in summary, what you mentioned and what we're talking about here is making a small or not so big account your master account, copying everything else to all your slaves, whichever phases or being live or not, doesn't matter, everything to that main account, and you only look to the main account, and everything else is something for reviews after your work day, right? After you finish your trading day, you'll go look and see if if the execution was fine, if there was slippage or not, if every trade was copied. And that's beside the point. The point is that you don't look at them constantly, and in that way you keep your mind free of those emotions or that risk of reacting, feeling something, right? Because you are human. That's something you'll never be able to act as a robot, although we should, right? We should not be affected by them, but you can't escape your body. So that's a great tip right there, Rich. Thank you for that. All right, let's see go ahead. You wanted to say something, Rich?
No, I was just going to say, when you started using a trade copier, obviously you use $100 risk on your master account. Did your mind start to tally up what was really on the back end?
Yes, but I have to constantly remind myself to not think about that and keep my focus on the screen in front of me, the execution, and of course those you can't stop those thoughts, right? If you are that number that is represented by 1R, I know that, of course, but it is at the background, and it helps me. And I keep doing that, just focusing on 100, 1R. Actually, I don't see a 100 anymore. I think in R. I see 1R, 2R, 3Rs. I don't see 100, although I know 100 is just 1.00R, because 1R, that's why I did 100. That's 1R is $100 in the main account. So it's basically just 1 R with 2 decimals. If I just move those 2 decimals, 2 spaces to the left. So that's how I manage that, and it works a lot. It works very well for me, and I think it probably works. It could have those good benefits for many others as well. But you will still have some kind of you know, of course, that you're copying. You know that this is not the complete risk you're putting on. But the fact that you're not looking at it, you're not reminding yourself, because that's something other people I've heard other tricks. One thing is they take off the screen, right, the P&L, so they don't look at it, they don't see it. And that's another good way to do it, for sure. But what are you doing when you do that? You are basically not forcing yourself, by having it on your screen, forcing yourself to see it all the time. Because as you see it, your mind goes on to digest it, process it, and you're asking yourself, should I act? Should I not act? When you see that, should I act? Should I not act? But if you're not seeing it, then there's nothing to, you don't have that automation of thinking, okay, you don't even ask yourself whether you should act or not. Well, that is something that I do not take it away completely. I put it there, so I'm aware of it, but I desensitize myself from it by having a common number that doesn't impress me, right? If I have 5 trades on, I know I'm risking on that account 500. It doesn't impress me. And that's where you need to be. You need to be in a place where the number doesn't impress you, doesn't affect you, doesn't really move you that much, right? But and you do that by using what I just said. There's someone in the chat asking about trade Copier. There are many in the industry or in the market, and I'm not going to indicate which one is better. There are commercial ones, and there are free ones. I'm not going to decide, not give any recommendation on the commercial ones, but what I use is I use a free one, and believe it or not, I like it that way, right? I'm using FX Blue. I have been using it for many years, and I don't even look at the names anymore. But if it's FX Blue trade copier, it's a free personal trade copier, and I've been using it for so long, and it is perfect for my needs, and it's free. So it's a very how do you say that? It's a very by being free, it's very good for those starting traders who you don't want to have costs creeping up on you as you are investing already a lot of time and also capital. So you want to keep the cost at bay as much as possible. But even after now that cost isn't an issue anymore, I still use it, because if it's not broken, why change it? Why choose another one? So let's look at the market. I'll put on my screen. Is my screen no, it is, yes, it's already there. Let's see, we have after yesterday, right? Yesterday we had that big candle, and actually we have been having these candles already, and these are of course what Saul. I'm going to talk a little bit about fundamentals, although I'm a technical guy, I'm a technician, but the all of this is of course has fundamental drivers, and the one of the drivers of this move that you can see also on not only on the equities in Japan, as we spoke yesterday, but across the board in varying degrees. We have been seeing, I mean, if you live under a rock, you haven't seen all those news websites and news channels talking about how far down, how much the massive drop in the equity market. And just to give you an idea, today we're barely negative. We are under 1%, 0.8%, which is a complete different day of the last couple of sessions, we did tap into a weekly, which was within a monthly demand area. So this wick is, according to the script, or according to the price action, is to be expected that it reacted this way. This is the Nikkei, of course, and it is consolidating today. And the reason was the carry trade unwinding. So that's just background information, since I don't use that fundamental driver in my bias anyway. But it's nice to know what is happening, and why things are moving the way they are. Right? There were also talks about Feds that they missed the chance of lowering interest rate, and that could be a reason as well why the equities are reacting the way they are. If we go to the S&P, it is also in consolidating compared to the other 3 sessions. So far, it's been doing, it is negative, and it's probably will be retesting some structures right below where we are right now. In the daily time frames, I have a demand area which lies below us, which hasn't tapped into yet. So I expect price, well, I don't know where price will go, but it will make sense to me if it's first, before it does anything, right? Whether it's going to go through it, then of course it's going to reach this area. But if it is going to have some kind of prolong or some extended retracement, I would expect it to tap into this demand area before it does so, right? So that is something for the coming weeks, or days, I should say, not weeks. That is the S&P, but that looks at gold, just to get an indication of what's happening. Gold, we have a weekly demand area. Let's start with that. We have a fresh order block on the weekly, right? We talked about this on the Discord call yesterday. We have a weekly order block, bullish order block, that is now being retested this week, right? This candle is 1 week of period. Then we have the daily order block, right, which is also fresh, that has been already tapped into yesterday. So I'm looking at this area as a possible area where the buyers can step in back into the market and start buying, right? They did it yesterday by leaving this wick, but this is the daily time frame, and it may take a couple of candles before it changes direction, if it is going to change, which we don't know. But this makes sense to me for a demand area. If you go to a lower time frame, price did not confirm by overcoming and forming and engulfing and signaling us who is in control, or better said, that the buyers have taken control. They haven't yet. Look at the order blocks that are being formed, right? There are bearish order blocks, right? That is how I interpret, how I read the tape. It is by the formation, right, and invalidations of the order blocks, right? The subject we talked about yesterday. If you are new to trading, you don't know what order blocks are. Yesterday we had a session, a live stream. We talked about order blocks, and it is, as I said, it is the creation and invalidation of those structures in the market that tell me which way the market wants to go, who is in control, right? So it hasn't changed yet on the H4. We don't see any transition yet to go to a long. What we do see is there is a quasi in the market, right, which is this a downtrend that has switched, breaking this neckline and going all the way up, and is now coming back below the 50% retracement. Let me correct this, because this is a little bit higher. And we have a couple of entries. Actually, right now, the fact that the market has gone a little bit higher makes this quasi. Let me see if it is. This is live market analysis, so I will check. There are more than 3, so that makes this a quasi that is a little bit inferior in probabilities, but still you can find these are the areas on the H4 that may form, where buyers may come and defend these areas, right? These two have been invalidated, so you only have that last one on the screen. So this is the interest place for me on the H4, if it is going to react or not on that order block. What else do we have on the daily? Going back, that is the area. The H4 is below that. And if you go to the lower time frames, I don't see any area except on the H1, right? But this is quite wide and frankly too wide for me to find a reversal. So I need price to form have more price action, and I need to see that break of the structure, and then I can get an entry, and hopefully it will be something that is interacting with the structure above, below us, and it is without invalidating that daily order block. So I'm looking for that long, but the market isn't ready yet. So I will not. I will just wait patiently for the market to, do what it should do, which is show us that it wants to reverse to the upside. All right, let's go to EU. Let's see. Fernando, a good friend of us, is asking to look at dollar CAD. I think we should maybe after EU, maybe you can look at dollar CAD, Rich, to see what we can see in the market. How the you don't trade dollar CAD, do you, normally, Rich?
No, I haven't traded that for a couple of years. Same kind of price action works on it. I just didn't want to take too many correlated trades in the USD, so I just dropped it to Euro USD and GBP USD.
All right. If how you feel about analyzing it after I do the EU? In the meantime, maybe you can see the point of control, where the market is, what is it trying to do, and so we can break that down, and afterwards I'll look it at as well in terms of the order blocks that I use, so everyone in the audience can have a broader, multiple views of the dollar CAD as well. Let's look on EU. So what do I see? I start on the weekly. Without going too deep into that area, we have formed a bullish order block below us, right? That's a sign we want to go higher. But first, I want price. This is for the long scenario. I want price to come back into this area for me to get a entry. That hasn't happened yet, and we'll have to see if it will happen. But we do have a quasi as well, which I showed this yesterday. That being the left shoulder, the head, the break of the structure, the neckline, I mean, the right shoulder, it makes a lower low on the weekly and is now retesting that same order block that was formed the right shoulder, right? So we are currently, we're not in there anymore, but you can see it's this candle hasn't closed yet, but you can already see how the market reacted to that order block. The market left a huge wick, right? And this is a pin bar by everyone's definition. So that is it hasn't closed yet, so you shouldn't trust it. You shouldn't do anything based on this pin bar because it's not a printed pin bar. But it is telling us something, right? Price did in yesterday up to today did reject this move, right? And the fact that it rejected a weekly entry order block on a quasi is very, very relevant. So I will be eager to see on the lower time frame as it is coming back into this area. Is it shifting back on the daily, the 4-hour, etc.? Is it shifting and forming bearish structures that we can use to get an entry on the weekly, right? I know you guys see me all the time entering on the minutes, but I'm always looking for that weekly, that daily trade, because those are, once you get them, they're so much easier in terms of the time you put in and the results you get. In other words, the returns on those trades are huge normally, right? They don't come as often as other signals, but I do want to catch them when they come along. All right, so that's on the weekly. Let's take this away. On the daily, what do we see? We have, without going too deep into analysis for to the left, because there are many structures that are at play. One of them is this bigger daily order block, which is a daily entry as well, but it's quite wide. I don't like it as much. It is valid. It hasn't been invalidated, so I would be able to take a trade from it, but it is not very attractive because it is very wide. But zooming in closer, what do we see? We have a bullish order block that was formed. That's below us, right? That's the process I do constantly. I identify the structures below and above us, either one each side or two, which are relevant, because I know that price will try to retest them as it continues, or maybe that will be the reversal point of price. So what do we have? We have a order block below us, right? That's the demand area. It hasn't been retested yet, and price is still fresh. So I'm looking for the coming trades, coming session, for price coming back into this area to catch a long, right? Since we have market structure being bullish, right? We're making higher highs and higher lows, right? That low is higher than the previous one. So we are in a uptrend, right? And so it makes sense that price comes back, retests, and reverses from a demand area, and maybe it will be this area. And it may not happen today. It may take a couple of days to get there, but when it gets there, I want to be ready for the next step in my trade plan, which is going to the lower time frames to get an entry. So that's one idea, one analysis for the coming days. The other one is, we are in this area. This is the weekly area, right? This is the weekly. Forget my scribblings, but that is the area. This area. I will show it with horizontal lines. That area, I will mark it with maybe not that one, maybe with a weekly. There we go. It's not a weekly, it's a daily, but this area from there to this, that is the weekly order block. So that is my area on the weekly time frame, my area of interest, right? We came into it and we are on the daily. So I want to see deceleration of price as it is coming in. Very similar to what Saul was talking about. He was talking about weakness, right? But it's basically the same thing, just another name, another tag for the same thing. When I say deceleration, that is also losing momentum. That is also a sign of weakness, right? So I'm looking for weaknesses. Weaknesses, what are weaknesses? I'm looking for the bars to become shorter, smaller, right? They start forming bearish structures, right? Bearish engulfing, pin bars, outside bars, anything bearish, and breaking bullish ones, right? Because the market doesn't give you, right away the structure. Sometimes it gives you a couple of bearish structures and also some bullish structures. But the way it does that and starts breaking those bullish structures, you start to think, okay, the balance is shifting one way, and it needs to shift back. It needs to transition back into bearish order flow. All right, so I don't see that on the daily yet, so there's nothing to be done, right? So we're very early in this setup, which is the weekly setup. But you need to be prepared for price when price gets there. What else do we see? On the daily, we have on the H4H or time frame, getting a little difficulty with my words there, but the H4 order block, and in this time frame we have a outside bar. I haven't talked about outside bar for the new viewers. Yesterday I only talked more about, well, I did mention outside bar, but we didn't talk a lot about that. But we had one outside bar here, and we had another one here, right? So we have two outside bar back to back, telling you there is a lot, that area is very, very important, right? This is the area where the buyers came in, right? So that to me is very significant, and it leaves behind different order block, right? This is based on the first uh, uh, outside bar, right? This is the engulfing, not the first outside bar. This is the engulfing, but we have a bigger outside bar on the EU as well. I use the smaller one for alignment, for, I'm sorry, not alignment, for make it more precise. I forgot the word right now, but refinement, that's the word I use, refinement. So I use the other ones. I know that the H4 is wider, but if I have multiple structures, then I can refine the area a little bit better where the demand will be coming in, right? So this is the area that I would be looking for an entry. So that is the area on the H4. I go to the H2, and there is to the left, it's not fresh anymore, and there's no quasi. So I'm not going to be using this engulfing this order block on the H2. As I said, it's not fresh anymore, and there's no quasi. If I go to the 1 minute, I see there is also an order block here, and it seems to be doing its job quite nicely, but my rules tell me if it's not fresh and it's not part of a quasi, I don't use it. So I don't use those. What I do have is we do have on the 1 minute an order block that was formed right here, right? That's this engulfing, the first one. And what does price do after it forms that, right? It forms it. This is the engulfing forming, and it comes back to retest within this order block, and then it shoots away. That's perfect price action in terms of what it's how we expect it to do. So I would go to the lower time frames. I didn't trade this for other reasons, but this is the way I would approach the market and look for those quasi in those lower time frames. So I would be looking at, for example, this is a very nice quasi. This would be the break of the structure, and as price comes back into this order blocks, that's where I want to be getting my positions in, right? This is a bigger area. This is on the 5 minute, but that would be an area that I will be interested in taking in this case, a long from, because I have everything lined up. I have the H4, I have the H1, and on the lower time frames, I have a reversal pattern that tells me that this is a great area. It may not work, but this is a great area that if I take this many times, I know that I will end up winning, right? My data tells me that, and my experience as well. All right, so how shall we take a look at dollar CAD, Rich?
Yeah, let's do it. I've got the chart up on my screen. A little bit distracted. I'll show you ever so quickly what I'm looking at on EU, and then we'll go straight back into dollar CAD. So this is the trade I'm currently in, and this is what I'm afraid of. I think price feels this and sells this. Just missed this entry at the moment. I think we're going to have a hard time pushing through this price action. Now, my data performs incredibly well at 1-to-1. So this for me is TP or stop loss, but I've just got this in as a little short idea. So I'm going to keep an eye on this. It would have just missed the entry at the moment, but if the market sells lower, this will be close to the price point it does it from. So just keeping an eye on that at the moment. USD CAD wouldn't touch it less than the hourly chart. So when I was trading this, what I was doing was I was looking at the hourly chart, and I was looking much the same as what you were saying about quasis. And we get these very, very obvious kind of price points like this, where we can see market failed to go higher, then bursts through it in a big way, pushes lower, and as it pushes lower, it starts to take out multiple structure points. You've got one here, you've got another one here. Let's see if we can just get this down here. And these now leave these really nice zones that we can look for these quasi patterns. So we're trying to find like where would the market pull back and anticipate a rejection round about here. So if I was to trade this on the hourly chart, I'd be looking to trade this something like this, looking for 1-to-1 or whatever I could get round about this price point. So if I was long, I would make sure that at a minimum I'm out before we start running into this higher time frame support. Now, if I was short, we could find the same kind of pattern when we look at the lower time frame. So if we zoom in ever so slightly, notice that we've broken the high side up here. We ran these highs we couldn't break and close, but before we ran the highs, we also ran these lows. So it's looking at these lower time frames and saying, is there a trade idea where the market could come back to this zone down here and look to bounce? So again, if I was short, I'd make sure that I'm out before this zone, because what I want is the moves in the market that are easy to get. What I don't want is to sit through these kind of turning points in the market, because when we look back on the 1 hour, often before the market turns, if you look at significant lows, you can run them across and you'll find market will run these areas and then it will push to the high side. And very often, market rallies higher, comes down, looks like it's going to go higher, rallies low, takes out all these lows, then pushes to the high side. And before it pushes to the high side, it takes out this last bearish candle. So market's often leaving clues and footprints of where it's been. And these areas become really, really good zones. Even if we zoom in on this here, this tiny little bearish candle, and we look at the low that was taken out, I'll jump down to the 15-minute, it'll become a little bit clearer. And we look at this low down here, market run down, took liquidity from these lows, rallied to the high side. And if you run this across, what do you notice? These zones hold really, really well for price points for the market to at least stall. Now, I don't necessarily trade long from these zones. What I do is make sure that I'm out on my shorts before we hit these zones. So if I was selling this market lower, I would make sure that I'm out, because I would anticipate at least a pullback or a reversal on this. Concept works right the way down to the lower time frame, but I would keep it on a higher time frame. I would keep it on like an hourly chart, because I think it's just so much easier and clearer. So maybe wouldn't long from this, but I would definitely be looking to sell from this higher time frame here. When candles push up with so much volume and then completely get faded, I'm relying on this selling pressure all the way lower and anticipating that the market will do the same again if we push back up to these price points. So you can do GU, EU, NU, AU, UC, and UF. UJ, I didn't get on too well with this, but 6 major pairs, I traded this way for a long, long time. Used to get about 14 setups a month. I heard the concept explained as raid, break, and return. I just know it as I won't call it the official name that I know it as, but because it's probably not appropriate. But 1 hour stop hunt, break, and structure. If I can see that, I'm good. To me, this was a stop hunt, broke structure to the downside. We've got selling interest up here. There's a zone. Let's go. Let's see if we can pick, where we would want to sell in this leg lower. And it worked really, really well until I think I never had a drawdown bigger than 4R in a year and a half. And
Wow.
when you think about 14 trades a month, that's pretty good. Now that's at 1-to-1. So my win rate was really, really high. In 2 days,
That's
I took 9 losses back to back. So market conditions shifted really quick. But the problem I didn't pick up, this was when we had the unrest with Russia. And the market was fundamentally driven. It didn't care about my levels. And it just said, Rich, I know you got this beautiful little zone, but you know what? I'm going this way. And there was me just sitting there with these limit orders thinking, hey, the market will bounce here. Market didn't bounce. 9 consecutive losses in 2 days. And I was like, a good trader will execute on their edge relentlessly without fault. I'm like, this is what I've done. And I've got all these losses. What do I do from this? Really knocked my confidence. And then I started to look at what's happening here. And my edge works nicely, but it was in those fundamental times, like what we saw yesterday, what we're seeing today as well. Have to be a little bit careful about when and where you choose to trade this stuff as well. So that would be my breakdown on USD CAD. I'll be looking to sell in this higher area. I would be out before this zone. And then failing that, I'd just be looking at this price action. And I'd just be looking for these areas where we see lows that have formed twice. We've got one just here. And so this would now be another zone. I would say, hey, I like this area as a zone. Then we go ahead and put a box on this. And if the market gets down to here, we might consider buying. Market brought here once, brought here twice. Will we see a head and shoulders pattern form on this zone? And then I'll just follow it back again. And I'll just be like, well, this one's already gone, broke, retested and gone. So I'll just be following this price action through. This one we can see broke, retested and gone. So yeah, I think if this fails, I'd then be, well, the good thing about this, if this fails, What do you got up here? If we break to the downside, we've already got beautiful zone holding to the high side up here. So that's how I pick my zones. That's what I would be interested in on USD CAD.
Very, very nice breakdown, Rich. I will show my chart as well as to what I think is possible. Let me go to my screen in a short little while. There we go. This is dollar CAD. All right, let's look. What do I see from the panoramic view, right? Without looking at the order blocks, just looking at price action, we see that we have broken. We are in an uptrend for sure, right? We're making higher highs and higher lows, so we're an uptrend. Just to have that into your mind, or having where we're coming from. Not only that, we are at the end of a huge impulsive move on the daily, right? So some retracement is healthy. The question is how far, of course, right? So what do we see now? Let's look at the order blocks. What do we see? We do have an order block that is being tested right now, and that order block coincides with an earlier order block which has already been invalidated. But it's that idea of supply zone, being broken and then being reused or flipped and used as support. So it makes sense that it could do something like a break and retest. Like it breaks it and come back and uses it as a support to continue higher. So that's an idea I do like about this, where price is currently. What I don't like about this is that there is an outside bar, which tells me there's a lot of selling pressure from this point. Whatever is up here causes a lot of sellers to be very, wanting to sell this a lot, right? But this is on the daily, so it doesn't mean it's going to go in a straight line. So you can still, even if you see this, you can say, okay, it's going into a possible demand area. Maybe it's going to retest that order block that was just formed as it is going down, maybe for a deeper retracement. We don't know that. But the fact that it made this outside bar is significant. So you need to take that into account. What else do we see? We go to the lower time frames. We see there is a 4-hour order block here. I didn't put it on, that we respected previously quite nicely. It's not as fresh anymore, so it's not something I would like to trade from, use as a signal, but it is there, right? So there is an H4 order block there. What I do see is that there is a quasi on the 2-hour, right? There is a quasi here. I know it's not much of a quasi, but it is there. And a quasi is a reversal pattern, right? So that would be this is the minimum you need for to satisfy that quasi, that reversal pattern. You have a lower low and a lower high, breaks the neckline, makes this all the way higher, and that's the 50% retracement. It comes back, and you're looking in this lag for support areas, where demand areas where it's going to likely to bounce off from, right? The first one was this one. It invalidated it in this bar, and now it is in the second and last order block. So this, to me, this area indicated by the possible entry on the H2, that this is the area that we need to be looking for, going, that's the test for me, right? Okay, so I have that. We do have on the H4 a fresh order block, which is nicely in the H2 order block. Let me show that. Are we talking about this order block? This is the H4 that was formed, and what does price do? It comes back into that order block, right? The H4, which coincides with the H2 entry on the quasi, which coincides with the daily order block. So I like this. There is a setup in here, and I'm sure Fernando is that's the reason Fernando wanted us to look at it, because this is opportunity. So we go lower time frame. What do we find? We find prices coming near this H1 order block, and you could be looking for that sign of price reversing back. This big candle is very frightening, but it doesn't matter. What matters is, does it change into bullish order flow from in this area? And this area, I mean this area, right? From this one to that. That's the area that I want price to switch back to bullish. If it does, I want to be part of it. And if it doesn't, then I don't do it. Then that's fine. That's the we need to let the market tell us what it wants to do. Thank you, Fernando, for that great setup you made us look into. So that is something that I'm looking for. Keep in mind, there is a outside bar on the daily, so it wouldn't have a lot of difficulty, retracing even further, especially because you had such a great extended move. But in the meantime, before it does it, price doesn't go in a straight line. I always say that. And the fact is that it is quite possible for price to come back, reverse from this area, go to some other area, and then continue its way, tricking us by both ways before it does what it eventually wants to do. So a great setup right here. We are at the end of our live stream. This has been a great session with Saul trading with us live, showing and sharing his scalping strategy. I enjoy that a lot. Tomorrow, guys, we have some surprises. Actually, it's not a surprise anymore. We have put it on YouTube. Tomorrow we will have Rolf from Edgewonk. He will be showing, his website for journaling, which is so important for your growth as a trader. How you record, how you journal your trades, and you get those information from your trading. Is it, what are you doing that could be improved? Where are your blind spots? It's all in your data. Rich is a huge proponent of focusing on the data. So am I, and so are all the great traders, because data is the basis, should be the basis. Data is the best mentor, right? But how do you listen to that mentor? How do you get those information, those advices from the best mentor, your data? It is by journaling. And tomorrow we will have someone. We have a couple of surprises for tomorrow, but tomorrow we will have Rolf from Edgewonk explaining all the good stuff that Edgewonk can offer us in that process of listening to that data and extracting those valuable lessons and information we need to become and improve our profitability. And if we haven't reached profitability yet, reach it. Passing those challenges, getting those payouts, reaching those goals that we're working for, right? That's the idea. So great stuff for tomorrow, and we will have giveaways tomorrow. So make sure you tune in for tomorrow. Any closing comments, Rich?
I see Rob is just asking, have I closed EU? Not on my main account. No, I managed to hit the smaller target. So I've managed to finish that account. That's now funded. So I've taken that off the trade copier. But on my main account, I'm going to be holding that for one-to-one. Much the same as we said yesterday. Just zoom out from your trade, close the P&L, ask yourself good qualifying questions about your trades. Are you journaling? If you're not, why not? Always find that action step. It's the reason why I named my channel Take Action Trading. I wanted to remind myself, Rich, you're not going to get anywhere by thinking about it. You get anywhere by making actionable steps. So if you've been inspired by anything that Victor has shared today, anything that Saul has shared today, ask yourself what's the action step and get up tomorrow and actually go and apply it. It's the only way you get anywhere in trading. That's it from me. That's all I got.
Nice, guys. If you, and I mean, it's so obvious, Rich has a lot to offer, right? If you think that he will be able to help you and you want to hear more of him, right? He's very modest. He barely mentioned it, but he has a YouTube channel, right? Take Action Trading. Have a look. Subscribe if you haven't subscribed yet, because let him know how you appreciate the content he's putting out. And not only that, take the information he's offering, right? It's all for grabbing. You can go there and learn from a great trader as Rich is, and it's on his channel. So do visit his channel. And in the meantime, also, I would like to ask everyone, recommend, suggest, hit the like button. if you like today's stream, you think this is great, because the more hit buttons, the more likes we get, right? The more, the algorithm of YouTube and the social media, the more it will be posted for everyone else to be suggested, right? As something that comes on their screen. So if you think this is helping you and you think it will be helpful for others, right? Pay it forward, hit the like button, and it will be showing, and more people will come to that great content that we're offering. So that said, I thank you all for being with us today, and we will be again tomorrow, same time and same place. Don't miss out tomorrow. That's it for us. See you guys tomorrow.
See ya. Thanks a lot.
Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.